What's going on, guys? This is Baro, aka Invest Mentor. Thanks for your time and watching. Today is August 3rd. It's the start of August. Okay, it's coming to the middle month of the second quarter, and yeah, it's Tuesday again. Yeah, thanks for your time and watching. In the live stream today, we're gonna like go through real quick about some of the major things for the U.S. financial market and the stock market. As you have known, like last week, what's important, what's big next week? Last week, we know that the Amazon's earning was pretty depressing. So Amazon last week just pulled back for like about like 7-8% last Thursday and Friday. That's one of the big news. And also last Friday we can see that the Fed just turned to be like more hawkish, to have some like a hawkish announcement. Like earlier, the Fed was saying to be tapering for the monetary and fiscal policy in the last quarter of this year, but it seems that the Fed is going to make it earlier in the third quarter this year. And because why? Because the job market is recovering very, very strong, and that's also the thing. This week we will have the some like major employment data to be announced on Friday. This week we will have the non-farm payroll for July non-farm payroll. That's a big big announcement we have to keep a close eye on. And also on Wednesday we will have ADP. It's also related to the employment data. And also on Thursday we will have the weekly initial jobless claim data. So let's see. I read something, and I also had some like a briefing for the thing I just mentioned. So but like I mean, like after all, like my point today was going to say like the economy right now, the U.S. economy right now is kind of a weird, it's kind of odd, it's kind of strange. Why? Because as just mentioned, the U.S. economy growth is like a slowing down. It's not set by me. It's just like it's set by statistic and data, and also by all the institution and those investment bank. We will go into more detail about that. So the U.S. economic growth is slowing down, and probably the peak is in the middle of this year, and will be like still slowing down even faster towards the end of third quarter or fourth quarter this year. And then, as just mentioned, but I mean the economic growth is slowing down, but the job market is recovering strong. Right? It's weird, right? It's not normal. And why the Fed just became more like hawkish to be to make the tapering like earlier, because just because the strong job market recovery. Okay, so it's kind of like just the disorder. I mean, in the U.S. economy, in the financial system is like emergent, right? A lot of like things just come without a logic right now. Okay, so let's see. Let me go through this real quick for you. And yeah, thanks for all the audience here. Hi, good morning and good evening. Like once again, I'm in Taipei, and thanks for all the audience in the US. It's like 9:20 East time right now, and probably it's like people in California are still on the bed. It's about like 4 a.m. 4 a.m. right now in California. But good morning to all the American. And yeah, like, oh yeah, like thanks for I just saw the question, like modest grant. Yeah, thanks for the question. You say like Amazon sucked. Yeah, Amazon sucked. And then we were, I mean, we were going to like the technical chart of Amazon. Like in the past, like a couple like a live stream and short video, I was saying Amazon is definitely I mean one of the like I mean the gold chicken, right? The gold chicken, like I mean for us to do investment as well as the I mean the short-term trading. Well, so but my personal opinion, I mean, my personal 2 cents, I thought like the dip, the pullback of Amazon last week was definitely a good timing for us to buy the dip with great discount, and we'll see why. And today, I mean, another relevant news just came out today. Uh, uh, Alibaba also had a you know, just like a business slowdown because let me see. Okay, there's the news. Okay, let me just read through it. Alibaba misses revenue estimate as e-commerce growth slows. Regulatory crackdown persists. China crackdown. And but it's saying that e-commerce industry is slowing down right now. But that's kind of normal, right? Because it's kind of like it's approaching the maybe the end of the pandemic, the COVID-19 pandemic. It's a kind of like the post-pandemic era. So like e-commerce slowdown is totally normal. I mean, in the past like 1 to 2 years, why e-commerce surge? Because like you know, just like people, like everyone around the globe, just kind of there was a big change of our shopping and behavior and all the you know, activity, right? We do, I mean, people started doing things online, started buying things, doing shopping online. So that's why e-commerce just surged after the start of the pandemic. But it's going to the post-pandemic era. So the slowdown of e-commerce, I mean, from my 2 cents, I think that is totally normal. And I don't think like the slowdown of e-commerce will literally kill Alibaba or Amazon, this type of like e-commerce giant. There's no way, okay? So I think just because of the news, like e-commerce slowed down, so Alibaba and the Amazon's earning, the second quarter earning, just like you know, just you know, just like below the expectation. So there has to be some like pullbacks. So, but that's why it's a good time to buy the dip, because I mean, in the long run, in the mid run, like for those like investor, the price will still recover. It just like temporary white noise. The price will still recover, and for those short-term trader, we will see why that might be good timing to do some like swing trade as well. Okay, so yeah, buy the dip for Amazon. Okay, buy the dip for Amazon. AMZN. Okay, that's my 2 cents. Okay, but like, you know, once again, before everything, like, you know, I still have to I mention that like over again every short video as well as the live stream. I'm not a licensed financial advisor, although I was working in financial industry, but I'm not a licensed financial advisor nor a accountant or a lawyer. So everything I said, everything I produce in my channel is like purely, totally for entertaining and educational and the informational purpose. So for your I mean for for all of your like trading investment, please do your own research, investment research and analysis, and make your own wise and smart decision, okay, and be responsible for your own loss and the profit, please. Okay, let's see if we have some like okay, someone like idiot, three idiot. Okay, Three Idiot is like the movie of India. That's a great movie. That's a great Indian movie. It's a yeah, it's a great comedy. So Three Idiots asking about like NKLA. So let's see if we have time to check into that. But before that, let's see how do you I know you were trouble when you walking. What a long name. What a long name, dude. So how do you tell the difference between a trap and an actual good dip? I always can tell if a stock will keep dropping or not. Yeah, we will never tell the I mean, if we are not a like insider, okay? Unless we are insider, okay? We will never be able to tell the true difference between between a trap or a dip. So like no matter you're doing like trading or investment, we always have to do the trading setup or investment setup before we place the order. We have to set the stop loss and profit taking point for our trading for no matter for long or short. Okay, so when we try to buy the dip, if it's not really a dip, if it's not a long short reversal and it doesn't like pick up, it doesn't rebound, we just stop loss, right? But I mean, a lot of times, like for a lot of the beginner traders or uh, you just you just don't want to regret. We just don't want to regret. A lot of time we just I already lost something, but I just want to bet. I just want to keep bet. I just want to keep wait until like we almost lose everything of our own, right? So yeah, the trading setup and very disciplined and well planned trading setup for profit taking and stop loss is always the key. It's always the key. Okay, so I've like mentioned about that like over and over again. When we do the trading setup for stop loss and profit taking, we will see the risk and return ratio to see what we're gonna do for the order we just placed for no matter for long or short, right? Okay, because yeah, that's it. No more because okay. So Donald Duck suck Gores. NASDAQ GRSV shareholders meeting today to vote on SPAC deal with that metal packaging. All right. So Donald Duck suck. Yeah, I to be honest, there are just like way too many stocks in the U.S. stock market. But yeah, it's a good question. And like GRSV, let's see what's that? What's that? I mean, I never, I haven't got a chance to pay attention to this one. Oh, but let's see. Okay, but by the chart of GRSV, right? It seems to be another weird, weird target. Just like the market cap is about like a 670 million right now. So it's like a small cap, and I haven't paid attention to this yet, but so I have no idea why it just like dropped like all the way from 22 to like $10, probably at on the IPO day. And the Course Holding is a blank check company. Company is formal, but like just like before we really dive deep into the detail and background of this company, I would say usually if we just skip it, yeah, that's pretty interesting. That's pretty interesting. And Donald Duck Sock just asking about a shareholder meeting. So yeah, sorry about that. I probably need to spend some time to to do some like research through the portfolio and what's going on for the investment meeting for this stock. So Donald, please, I'm really interested in this stuff for like seriously, and like please like leave me comments after the live stream, you know, down below this description box, and then I will research into this stock and reply your question in there. Okay, so but right now I cannot answer your question, sorry buddy. Okay, Amazon, yeah, we will go into Amazon just in a minute, but have some. Okay, so so what was so the US market just like open, so let's see what's going on for the US market. All right, so the other major indices are not like moving too much so far today. So like most of the US stock indices are in a high consolidation in recent day, but we can see that there is seemingly like a triangle contraction for NASDAQ index. But like so far, I mean, nothing big from like tomorrow, yesterday, and today. But you know, so let's come back to the focus of our original focus for the live stream today. Okay, so I was gonna say the economy and it's kind of weird. The economy like environment is kind of weird and strange in the US. You know, the economic growth is slowing down, but the job market, the job market, the job market recovery is like you know, is strong. So it doesn't make sense. And I just read an article last week. Okay, I just read an article last week about through the pandemic in the past like 1.5 years, about like 40% of the American, European have been thinking to resign. 40% of the, you know, the worker in the job market have been thinking to resign, and that's a epic historical record. You know, can you imagine like almost like 1 out of 2 worker is going to resign? And why is that? Because through the pandemic, a lot of people just stay home, right, for social distance, but people can still get the support from the government to get the check to pay their ends needs. So, and a lot of people can not even make as much money, you know, compared to their I mean the day before the pandemic. So but I mean different people just have a different thought or different reason, but all in all, like a lot of people just want to resign, and a lot of people just find the true value to I mean to stay to spend time with their family and friends, and you know, with their kids and all that. So a lot of people just want to resign to kind of maybe to have a startup business, or to like do something to work from home, or to change a job or something. So this phenomenon also make the I mean also lead to a shortage in the job market. So and that's also why the a lot of like job openings are out there, are available there without people without enough people to apply for the job, right? So that also you know, fake the like the employment data a little bit. So you know, That's the thing. Let's read through this. So now, according to market data and survey in July, 40% of US workers have been thinking to resign after finding their true value or living philosophy through the pandemic, making more job available and shortage in labor market, while US economic is slowing down, but the Fed is still tapering soon. Can you see the can you see the logic behind? So basically, the economic growth was probably faked. I mean, the economic growth in the past half year was probably faked by the endless money printing cycle instead of real innovation and practical efforts made by US citizens. That's the big issue. So after a temporary hype of illusion from the money printing cycle, from the money printing drug, people haven't, American haven't really woke up to struggle for their life. Okay, so people are not like really like struggling, like American are not like really making real true efforts to make the economic growth happen. So but the government is going to be tapering soon. So what's going to be the next, right? It's going to be a crash, because the Fed has to do the tapering, otherwise has to reduce the QE, otherwise the inflation will become like worse and worse. But if they do the tapering too early, too fast, like the market crash will bring a disaster to not only the financial system, stock market, but just like trickle down to the the everyone's life in the US. Okay, so it's going to be a really serious like social problem afterwards. So back to our point. This is right. Our major focus is on the investment, like stock trading and all that. So for the information just mentioned in the past like 20 minutes, I think the nightmare of like financial market crashes seems impossible to get rid of. So as mentioned in the previous like live stream and short video, any snowflake might cause the avalanche, or any straw can break the camel's back at any time, right? So back to the point again, in the past like in the past like 2 quarters, in the first quarter and second quarter of like 2021, retail investors have been like throwing money into the stock market, while NASDAQ insiders, so those like corporate insiders, have been getting out of the stock market. Think about that. What's the reason? Okay, so my thoughts is still here, is still not changed. I think the third quarter is still dangerous, and it's not like it's not set by me. This is this is set by me right now, but this is kind of like concluded or organized, with a lot of information from those experts, financial experts, from those information online, from those like financial data, from those like macro events and all that, to make this thought and decision. Okay, so I think third quarter is really a time to be more conservative, to be more defensive, to do your hedging for your trading and the investment. Okay, so stop chasing the greed, stop chasing the profit. It's a time to be cautious. Okay, the risk management, portfolio management, rebalancing for your stock holding and or your like assets allocation is very important. And if you really want, it's impossible for us to kind of like to retreat all the capital from stock market, right? That's certain. But maybe it will be better to move your capital from those like risky assets, from those like risky stocks into some like a value stocks or like hedging stocks or hedging assets like those like a fan stocks, like a crypto linked stocks or some like value stocks that like the US stock queen Cathie Wu is holding. Okay. Or and also I think it's also, I mean, it's also mentioned by a lot of people that like saving some cash, holding some cash, just like cash out from the stock market, from some like financial asset, to have to hold more cash and wait a little bit in the third quarter to see if there is really a bad correction or like a crash for like over 10-20%. So that would be a time for us to buy the dips with great discount. Okay, so I think like, right, just what happened last week for Amazon, that if you have enough cash, that would be a good time to buy the dip for Amazon. Okay, so let's see, so let's see what's going on for Fin. We just mentioned about Fin. Okay, yeah, so we can see that this is the technical chart for Amazon. And okay, let's see more here. Why for your slow pace today? Yeah, thanks. Probably because the market is having too much money now. Yes, the money, the market, the US stock market, and a lot of financial market, and also the Taiwan stock market, okay, and like Korean stock market. Most of those like capitalist systems, like the stock market, like Japanese market, Korean market, French market, and like Germany market, are like highly correlated to the US stock market. So that's why all of these market have been just like, just like stepping, higher and higher, since the law of the pandemic. Okay, so if you this is really for the question, too many money in the stock market. Let's just see. Okay, let's see. This is like a NASDAQ index. Okay, so we just see a monthly chart of it. So you can see like how on the positive side, you can say, oh, it's very strong, right? But on the if you would try to be more like conscious or sensible, it's just abnormal. Okay, it's just abnormal. You can see the time of the high of like 2016 here is about the high of like 2000. Okay, the dot-com bubble. Okay, so like by 2016, the amount of money in the market, there's still not that much like over flooding. It's still not that much abnormal. But like since the presidency of the the great Donald Trump, we just have all the crazy money printing cycle there. And also we cannot blame, or maybe thanks to Donald Trump only, a lot of things like involved here, and also the pandemic and all that, and also the fight between Democrat and the Republican. So but anyway, you can see from like 2016 to like right now, like how steep the stock market is. So the chart, you can see the chart is totally 100% built, and and the stack up by cash, by US dollar. Okay, so how much US dollar have been printed to make this like crazy chart. So it's not hard to imagine. It's just the same thing for S&P 500 and Dow Jones Index. So later on, if you have time, you can check into that. So in the past like 2 to like 4 years, the market was just crazy. Too much money in the market. And originally, government should be printing money to help people, right? To make it like a stimulus, right? To make it like a catalyst to trigger people's motivation to work harder, to you know, to boost the economy, right? But right now it just kind of like abused. I mean, the policy seems to be abused a lot in the past few years already. You know, just like if you got sick, sometimes you need to take like aspirin or painkiller to stay, you know, to stay fine, to work, to leave. But if you started using a lot of like crazy drug like opium or something and keep like using that, and that's gonna be a totally different story. Okay, so okay, so we'll probably go to, yeah, we got one more ticker from Boeing, IXIC. Yeah, so we'll also check into that. So what is IXIC? Okay, so it's okay, this is really what? Sorry. I thought that was a stock ticker, but that just yeah, just NASDAQ. Okay, so yeah, so curious about when we're young. Thanks for the question. Curious about U.S. non-farm payroll statistic, right? So it's gonna be on Friday. So let's keep a close eye on, I mean, what's going on this week. Okay, so non-farm payroll is on Friday, and ADP is on Wednesday, and initial jobless claim is on Thursday. And I mean, my prediction is that the I mean, since the past couple of months, the employment data has been strong, and I think, I mean, and also just that's also what I heard from a lot of the my friends and also like banking analysts in Hong Kong. They say the employment data are just going to, like, you know, I mean, just gonna like continue to be strong in the next like few months in the entire third quarter, and that's gonna make the Fed's tapering like speed up or like tied up even more. And you know, if the Fed's tapering like speed up and tied up more, what's gonna, I mean, what's the impact will come to the stock market, right? That's the thing. And probably just a, you know, like at least a temporary or a short-term crash or correction. So what you gonna do? Okay, so I also mentioned a lot in my previous live stream short video, like market, like a crack, like financial crash or market crash or like a correction, like bad correction. It's nothing we have to be afraid. I mean, if we are well prepared beforehand, that's actually like a annual sales event for us to buy the dip, right? Do you like annual sales event? You like, right? A lot of things just gonna be like 50% off, right? I mean, so that's why in every financial crash or every financial crisis, the rich people become richer and the poor people become poorer. So I mean, what's the difference? Why is that? So we have to try to think how those, I mean, we have to find out how those rich people have been like making money from all the financial crises in the past. Okay, other than hardworking, I mean, you know, just like learn something for your trading investment strategy. That's very important. Okay. AMC, okay. AMC shareholder, yeah, love you. Yeah, I see you everywhere. Last time I see like AMC shareholder on the magazine too. AMC shareholder is probably a sponsor man for AMC. Like, but let's see what's going on for AMC right now. AMC, you know, I'm not saying it's not good to trade, but maybe you can do something like short. So AMC shareholder, are you like shorting or like are you going long or short for AMC? Right? So let's see. That's the chart for AMC. Okay, so the price is about like 33 right now. So on the chart, we just draw, and it's very easy and simple to draw the chart. and I'm not gonna erase and redraw again, but we can see right now today, right now the price is like break down below the support, okay, the support here, and it has been break down for 1 day, 2 day, into 3rd day. So it just like strengthened my opinion to short AMC. Okay, so yeah, I'm gonna short AMC today. Okay, I'm gonna short AMC today because I mean the 1 day, I mean the 1 day price close for the candlestick is cannot be decisive somehow, but like 3 day is like stable and reliable enough. So we can see what's the close price today for ANC, but it's probably not gonna make it go back up above the support. Okay, the support is the upward slope here. So yeah, so what's your opinion, AMC shareholder? Yeah, you want to know AMC? Yeah, AMC is something everyone has to short. If you are still buying AMC for profit taking, it really gonna be speechless. I really have nothing to say. So I'm really curious, like, oh, AMC shareholder is going long. Okay, so I think you probably like someone from the like board, like a like a board of the, I mean the you probably the insider of AMC, right? So yeah, like show me something about like your trading, your trading like data, your trading profit for AMC. Okay, so I will, so I will follow you, but just for kidding. But anyway, I'm shorting AMC right now just by the technical analysis, very easy technical analysis, and there's no way to do any fundamental analysis for AMC at all these type of meme stock, especially during such a risky environment, market environment. Okay, so sorry, let's go back. We were going to see like Amazon, right? So like earlier we just like mentioned about Amazon, right? Amazon. Actually, the thing is like I'm also not gonna redraw the trend line here. It's very easy and simple, and we just like draw it last time. So the support here, no, sorry, the resistance here, the two resistance here are simply based on the previous high here, and here, and then the support is simply drawn based on the previous like high and low here. So because of the negative news about last week, Amazon just pulled back, but I think it's as long as the price doesn't break down below the support or the 200 moving average, the orange line here is still good for long in the short run. Okay, so if you want to do short-term trading, personally from a 2 cent, I'm still going long for short-term trading, and I think it's definitely a good timing to buy the dip. Okay, so but I mean, as mentioned over and over again, other than short-term trading, like Amazon is definitely a good target stocks for us to do long-term investment in the next couple of years, right? And also, just like I mentioned at the beginning of the live stream today, Alibaba just like had Alibaba, the e-commerce giant of Amazon. Alibaba also, I mean, e-commerce slowed down, and it's just a normal thing. It's just a normal thing in the post-pandemic, because at the beginning and during the pandemic, like everyone is like changing their behavior to to move their like physical shopping on to be like online shopping. So that's why e-commerce has been surging and growing a lot, like since the law of the pandemic, right? So that's why we can see Amazon, just like the stock price just surged from 1,750 during the pandemic low here, and all the way surged up all the way to about like 3,600, you know, to the previous high here last year. Okay, because of the pandemic, because of the change in behavior of everyone. Okay, so but right now in the post-pandemic, right? There's no way for every stock, for you know, for every market to surge and you know to grow so strong every single day, right? So you know we don't have like birthday every day, right? So this pullback is totally normal. This pullback is totally good for buying it. Okay, I probably too like you know talk too much about this. It's clear enough. Unless you have more insights or thoughts about like Amazon or the pullback, or if it's good to buy deep, or what's your trading or like investment strategy for Amazon. I mean, please leave your comments and thoughts in the chat room here, and also like in the description, in the comment area, in the description box down below this video. We will reply and you know talk further, discuss further into that. Okay. But besides Amazon, like last time I also mentioned a lot for Google, right? Google is definitely something we should look at. I mean the five giants from the fan stocks, like I last time I said like Amazon and Google are definitely the you know the two major, and you can see the chart. I mean last time we mentioned about the you know how beautiful and how smooth like Google's like you know stack chart like has been going since the IPO in 2007. Okay, and it just I mean it's not like the market cap of Google is like 1.8 trillion. Everyone in the world know about Google, and I mean we just like we just Google it. Okay, we just like you know do some research online. You can see Google always have like crazy innovation and the a lot of like breakthrough in not only you know the search engine and like cloud computing, AI and software, hardware and all that. So that's how like Google has been like so strong, like keep like going up. And you know this is almost like a monopoly giant, you know, other than the market in China, right? In China, like you know, people don't use Google, but other than China, Google kind of like dominating the entire world, right? So so I think the business mode and the competitive advantage is so obvious, and the market penetration, business growth outlook is so promising for Google, at least in the next few years. So last time I was mentioning that Google is there's no point to do short-term trading for Google, because the price chart and the upward trending is just like too strong and too smooth, and there's no point to go in and out. Just you know, for me personally, I would like to just you know, just like you know, appropriate like maybe 3% or 5% of my monthly salary to invest in Google for the next 1 to 3 years. Okay, so but why I'm saying like 1 to 3 years? Because like last time I was saying like Warren Buffett and all those like financial gurus say, in the past, like traditionally they think that the long-term investment has to be like 3 to 5 years or even more than 10 years. But in the past couple of years, the past 10 years, especially after 2016, the epic technology innovation breakthrough era, a lot of things just become like changing so fast, and a lot of things can be just like overthrown and turn around overnight or just in 1 year. So right now, I think 1 to 3 years would be long enough for mid to long run investment, because we really have no idea what's going to be after 3 years, right? So and a lot of people say, like, you know, in 5 to 8 years, like China is going to beat America. So what's going to happen after that, right? So what's going to happen after? Okay, so let's see if we have. Okay, so CNEY, the energy group. CNEY, what's that? Why? Okay, I never pay attention to these. Okay, this is really a small cap company, and you know, I want to mention, like, thanks for all the question and thanks for all the mention for all the tickers in the chat room here. And I understand that sometimes the audience online and the YouTube audience like to follow a lot of like super mover, and I'm not like, you know, talking shit. Okay, so there's a lot of like, you know, YouTube like you know, online audience, you know, like to go for some like gambling trading style. So you find those like volatile stock and, you know, those super mover to go after. But the point I have mentioned, especially recently, okay, if you really want to do like super mover or those like you know, crazy volatile stocks, maybe the first quarter was okay because the market was still strong and the uncertainty was not that many. But right now the market, the financial market, the, you know, just a lot of weird things just like, you know, have been coming out one after another. So in the third quarter from July, August, and September, you know, please, I really hope everyone, you know, because I mean, I think like I'm not rich, and I think like probably most of the audience in front of the you know, in front of the camera, I mean, are not rich as well. So we have to be protected for our asset. Money is really hard to make, okay? So I really don't, I really hope that you are not going to lose. I really hope that you can like make some money. So for these type of stock, like definitely later on, I will still spend some time to look into some detail for that and reply in my future live stream. But I mean, by I mean, by glance, I think this type of stock, I mean, probably just too risky for us as a retail investor to look after in a market environment which is so risky with a lot of uncertainty, like the third quarter this year. Okay, so please forget about this. Okay, please. And the yeah, AMD is going up and better than, yeah, I was going to talk about AMD as well. So let's see. Or I just have too many tickers. Or I will try. But let's look at, I was gonna so let's take a look real quick into Intel and AMD. Okay, so Intel is one of the stock I was going to mention, and because I think like everyone should have an I mean, has an idea that like the major like chip maker, two of the major chip maker are definitely Intel and AMD, right? And why AMD stock is like going up so strong, I mean, has been growing so strong in recent years because of the shortage of the chip shortage. And because of the chip shortage, the demand from the market is, I mean, it's not like focusing on those like top quality chip anymore. Okay, so they can use the second tier, the third tier, you know, the chip. So that make like AMD stocks like surge so hardly recently, and also because of some like bad news for like for Intel recently. um I was gonna say like Intel, if we can see here. So this is probably the first time we check Intel. So let me erase all the print line here, and you know, so that's the monthly chart for Intel. Okay, the Intel just went insane in 2000, like .com crisis. Okay, and just like come back up again in recent years, but it's kind of like in a fluctuation right now because of the a lot of the if you do a lot of event analysis, Google Intel, so you can see all that what's been happening for Intel in the past 2 years. And so these type, I mean Intel, I mean now it's turning into a target for us to do some like short-term trading. Okay. For technical analysis, like sometimes like, but I mean most of the time I like to look from like a longer term into shorter term. Okay, so we see like a longer trend first, and then come to shorter trend. What do I mean? Like I'm looking at the monthly chart here. So we can see if the monthly chart, we can see there is a pattern, right? There's a pattern, and I mean especially in the past 2 years. Intel is kind of in like a volatile consolidation, because like when a company cannot be like strong enough to like keep going up like Amazon or Google, it will just like go into a consolidation period, like what Intel has been doing right now. Okay, so for the monthly chart, we can see okay, just simply draw two support here. We don't need to have like one support as been allowed. Okay. These two supports are drawn based on the all the previous low here. Okay. So and then after the monthly candlestick chart, let's go into the shorter term for with the date chart. Okay. So with the day chart, you can see since the April this year, because of the market events and also the change, like the chip shortage and all that, Intel started pulling back all the way from like 68.49 all the way down to the current price about like 53.37, and it's still in a very clear downtrend pattern. Okay, so if we draw so if we have like the support line drawn here, like based on the like recent high in the past couple months this year, we can see Intel is probably good target for us to do some like short, I mean to go short in the short run. Okay, and also like as mentioned once, like this can be a strategy for your portfolio management. Once any like a stock market crash happen, I mean a lot of the stocks will pull back, right? Like Intel must be one of them, and in this case like Intel will probably like pull back like other than Amazon, Google, and the other blue chip stock. Okay, so to this point, if we go short for the short-term strategy based on the reason we have, it should be much more sensible or logical. right? And but you still need to have your like stop loss as the you know, you can use the support here for your stop loss about like a $56 here, you know, as your stop loss. And but you will have your profit taking point about, I mean, around the oh sorry, at the 2 support line here. Okay, the line above is resistance. Okay, we can have a stop loss at about like a 56 something, 55, 56 around here, and have a profit takings around here about like 49 something, about like 48 something. So do your calculation. I mean, compared to the current price, the risk and the return potential could be like a 1 to, you know, 1 to 2 or 1 to 2.5. So I think like Intel would be good target for us to do short-term trading in the short run. And I mean like for like Intel, because of the change in the market environment, you know, I'm not gonna make like a you know, just like a consistent investment for Intel in the next couple of years, because as mentioned, like Google basically has no competitor to be afraid. But like Intel, for like Intel, the market is like changing, right? Like AMD, like the demand supply issue, and also a lot of like China chip makers are like you know, growing to compete with Intel as well. So I'm not sure if like Intel is really good for long-term investment in the next few years, but it's definitely good for short-term investment in the second half of this year. Okay, because of by the technical and event and fundamental analysis. Okay, so please leave your thoughts, comments, or insights for Intel if you have. Okay, so yeah, it's coming to the AMD. Yeah, so yeah, after Intel, let's see AMD. Yeah, that's the thing. Like I mean like a lot of times when we trade like certain stocks, like we also look at the relevant assets, right? So when we trade like some like blue chip like a NASDAQ, I mean the major component of NASDAQ index, we will also look at the NASDAQ index to compare, right? To, I mean, as a support to do the trading for like a Google and Amazon, right? And like for when we trade like Intel, like AMD, the major competitor of Intel, would definitely be something we have to use to compare as a support. And you can see like AMD is really crazy right now. AMD is really crazy right now. In the past few days, it just like surged. It's like break out upward. Okay, so for AMD, like I think that's probably one of the major reasons, because of the competition and the market share issue, the supply and demand issue. Like AMD just like, you know, somehow like partially, you know, I'm not say totally, I'm say partially, you know, like eating into like Intel's like market share. So that's why the stock price should like surge a lot. But for these type of chart, I mean, to be honest, I have no idea if it's good to long or short. So but later on I will also do more research in detail to see what's going on for AMD, and last time we will talk more, have like better comparison between AMD and Intel. Okay, but for Intel, I think it's good to short in the for the short-term strategy. Okay, for the short-term trading strategy. For AMD, I have no idea yet, but if you have any idea or insight for AMD, please leave your comments and thoughts. We will discuss further as well. And NVDA is like you know, NVDA is like still, I mean, I check that, I follow NVIDIA closely. It's still kind of like we mentioned about that. It's kind of the current price is kind of in the kind of like in the no man land. It's kind of like too close to the middle between the support and resistance. So it's not a good point for us to buy nor short. Okay, so and also I don't think NVIDIA is good for long-term investment at this point in time, because a lot just like what happened to Intel, a lot of things are like a lot of uncertainty in the third quarter, and if like the market really crash, I think like this type of stock like Intel and the Intel, NVIDIA will be some of the worst target suffer. Okay, so and last time we talked about like some of the I mean, if a crash really happened, what would be some like safer shelter. We mentioned about that last time, and we will keep like mentioning that, like, you know, I think the safer shelter will be those target at a relatively like a lower valuation right now, like what's that, like for some like Coinbase. Okay, like Coinbase, like Coinbase, right? It's just it's just a stock. It's just a target. It's just a stock with limited room to keep falling. Okay, but with like relatively much better upside potential. Okay, no matter for I mean, just a common market environment or a dangerous or a risky market environment. Okay, so Coinbase is one of the shelter I'm looking after, you know? And also let me think. Oh, let's see. Okay, like ARKK, like we also mentioned about that for like a DraftKings. It's kind of like because the fundamental and it's really strong for DraftKings, and the technical, by the technical chart, I mean, it like for short-term trading, for really short-term trading, okay, for just like a few days, for like, you know, 1 to 2 weeks, it's also good to go short for DraftKings, because the risk and return, the support, the resistance and support are looking like this. So the risk and return potential will be good for short in the short run. Okay, but in the second half, I mean, for like you know, hedging strategy, I think like DraftKings is also good, like potentially good, better compared to the others for us to invest in the second half or in the next 1 to 2 years. Okay, so yeah, sorry, the time is limited again, and we really have a lot to talk, but I think, like, you know, a lot of tickers and a lot of questions, or, you know, just thanks for all the, you know, watching time and all the like mention and question. And yeah, we have a lot of the question much more relevant to the topic I was going to discuss this week for the live stream today, about the weird economy, about like how we can hedge and how we can, you know, like to be like, you know, do the portfolio and the risk management more, I mean, wiser. Okay, so but the time is limited, and I really have a lot to talk, but I will write down all the questions I haven't got a chance to answer today, and we will discuss more in detail in the next live stream. Or if like something are really, you know, there, it's good to have a, you know, single topic, I will make it in a short video. Okay, so please just show me your love and strike a like button, and subscribe. And after I close and shut down the video, please hit the like button and subscribe, and share my video, and I will try my best to improve the video going forward. Okay, so yeah, thanks for your time and watching today, and let's have more in the next one. See you.